Good morning. Welcome to this update from Phoenix Blue on Monday, the 10th of October. We'll start with the news. And Friday first, we had some manufacturing numbers out of the UK, which came in slightly disappointing, below forecast. I think the forecast is based on expectations that we'd see some follow through from previous data that suggested that the purchasing managers were gearing up for some bigger orders, having been taken post Brexit when we had the drop in the value of the pound, making UK exports cheaper. At the same time, still having access to those open markets in Europe, whilst the UK remains within the EU. So slightly disappointing there. We had good employment change numbers out of the Canadian dollar and a static unemployment rate. Then we had the big one, US non-farm employment change. Came in at 156k against a forecast of 171. Interesting other factor here was the previous occasion had been upgraded to 167k, so something positive coming out of there. Yes, we missed targets, but what the markets were really conscious of is they are giving the impression that any number this month and next month above 150 additional jobs added, 150,000 additional jobs added, will allow the Fed to raise their rate by 0.25% at the December meeting. So despite seeing a disappointment in missing the forecast and also an increase in the unemployment rate itself, the net result was the sell-off in the markets. Although there was some, it was more of a pullback rather than a negative reaction, as I say, because I think the key figure here is 150k. Now, overnight, we've had the second US presidential debate. Worth mentioning today that alongside that, today is a bank holiday in the US, also Canada and Japan, so we're going to be lacking liquidity in the markets. Obviously, because of the timing of this, when the markets are shut from the US perspective, we haven't seen any market, or we can't see any trustable market reaction until those markets open, and we might as well say we won't see that till tomorrow because of the US bank holiday. However, the press appeared to be calling what was quite a vicious, personally based debate following allegation or the video that came out about Trump, etc., etc., that the debate effectively ended in a draw, which could be perceived as being better on the part of Hillary Clinton, as she's ahead in the polls at the moment. So be aware of that. As I say, we haven't seen any sort of reaction specifically in the market, but that could be because of this US bank holiday. Okay, over to the charts. Well, we had on Friday, we broke above this key level here at 96.70, ahead of the non-farm payroll results. That data came in. It came in below forecast, and we did have a sell-off. It wasn't an immediate sell-off. It wasn't an aggressive sell-off, but we still closed within this triangle formation, which means at this moment in time, we're treating this as a false breakout. We are looking for price to break out again and close above this 96.70 level to confirm continuing dollar strength in this market, and therefore giving us direction for our majors and minors trades. Over on the yen US dollar JPY, we'd had a breakout through the week to the 104 level, which is a key level we're watching. We're now watching pullbacks to one of these two levels here. We've got 102.60 and 101.60. Bear in mind, there's also overnight there was a Japanese bank holiday, so I would be particularly cautious about taking any trades in this market today. And if you are looking at these levels, I would suggest that you need to be looking for price action entries rather than limit order entries. Okay, over on the euro, we saw naturally a reaction on Friday in terms of euro strength being the opposite of the dollar index. We had seen earlier in the week, we'd seen some bullish behaviour here on rumours that the ECB were considering how they would begin a tapering programme on their bond buying programme. So we will be keeping our eye on here, but we still are really looking at downside on this. We're looking for that dollar strength to kick back in, and we'll then be looking for opportunities below this level here and further down where there are a number of quite nice market cap trades that we could look to. Over on the pound, well, we had a busy week on the pound. Last week we saw, this is the 4-hour chart by the way, we saw the pound selling off quite strongly because of the government's stance over Brexit, looking at what's been termed a hard Brexit. Then on overnight on Friday in the quiet period of the Asian session, we saw a break below 126 and this massive spike down that's been called the flash crash, or a flash crash. Interestingly, the Bank of England Governor Mark Carney has asked that there is an inquiry into what caused this. Obviously quite dramatic, but also following what I said on Friday, I had anticipated that if it was a flash crash in the normal sense, we'd expect to see price recover to its previous level. It hasn't done so. It actually spiked down to a lesser extent on Friday morning. I took a small trade through there. I honestly thought it was going a bit further than that. I thought it might come back down to this level, but it's ended up consolidating in this range here. Now we have a number of opportunities or potentials here. We've got this channel here. Are we going to retest either the bottom of the channel or the top of the channel here, or more likely we will see a pullback back to the top at the 126 level, or even higher back up to this daily trend line and previous lows over here. The pound is clearly the weakest currency in the markets at the moment, so we're watching all the pound cross pairs. All look very similar, and we'll be looking to select the very best market when a trading opportunity arises. Over on the Aussie, well, we're in this trade on this short or this 4-hour. Doesn't show up too well on here. There's a 4-hour head and shoulders formation. The neckline was retested through non-farm payroll. We were hoping to have an opportunity to get in the market again there. That test having now happened, we weren't obviously trading it through non-farm. We'll now just simply let the trade run to our target, which is this lower trend line here in the bottom of the triangle. Over on the Kiwi, New Zealand US dollar, again we've got a head and shoulders formation here that is a lot clearer on a 4-hour chart. We are looking for a pullback to the neckline, at this case about 72.20 here, because of the bank holidays and what have you today. If that does pull back to that level, we will be looking for price action reversals as opposed to higher risk limit order entries due to lower liquidity. Here we've got WTI crude oil versus US dollar CAD. So we've got crude on the top and CAD on the lower. I showed you this a couple of weeks ago. The interesting point is if you look at the hashed trend lines or the dashed trend line, whatever you want to call it here, we have the markets which normally are very correlated, touching this trend line on 3 consecutive occasions, doing exactly the same thing. These being highs on the WTI crude oil and lows on CAD, being CAD strength with it being US dollar CAD being to the downside. We expect CAD to strengthen when crude strengthens. The interesting thing here is, following that occasion when exactly what we expected happened, we have seen crude prices shoot above that previous trend line, up and above $50, where they appear now to have turned. We short this market. We're looking for targets around, or longer term targets around this level here. So we're short this market. We're expecting the dollar to come back down, but at the same time, we haven't seen that reaction from the Canadian dollar. What we saw is, up to last week, we saw a ranging and an inability to break this level through here. And then last week on dollar strength, we've seen the Canadian dollar weakening, even when when crude is strengthening. If and when we see the crude market really weaken down to the levels that we're expecting here, I see a lot more upside to this market, particularly if we continue to see the dollar strength. If that dollar index closes above the 96.70 level and that strength plays out, we will have effectively two factors pushing the downside, or the upside on the chart, but the downside in terms of the Canadian dollar up the chart here. So that will potentially give us opportunities. We've got a level here. We are actually looking for another close above and a high above, and then we'll be looking for a pullback to this level to take this market to the long side on the chart. But again, that's Canadian weakness. So interesting charts there. Clearly, the Canadian dollar, despite having a battle against the US dollar, gives me the indication that the Canadian dollar is outside of its relationship with either the dollar or crude oil, is in fact a weak currency at this moment. So interested in the opportunities that arise in that market. Okay, that's it for today, guys. Don't forget, Wednesday the 19th of October, which is a week this Wednesday, we have our next free trading event in London. If you're interested in coming along to trend alongside our fund managers, absolutely free of charge, 4 hours trading in central London. If you pop on our website, go to the events page, register your details there, you'll get an invite and all the joining instructions for that event. Okay, guys, that's it for this morning. Bear in mind those bank holidays. Trade cautiously. Patience, as always, is the key. We're looking for breakouts in a number of areas in order to for price to play out as we are looking for. Don't jump in. Wait for closes above and price to pull back. Okay, have a great day's trading, and we'll speak to you again tomorrow. Take care.